Welcome to the China EV Weekly, your go-to podcast for the latest insights and trends shaping the electric vehicle landscape in China and beyond. Today we will cover you. China's electric vehicle industry embraces battery swap technology. Turkey engages in advanced talks with BYD and Chery for factory investment. SAIC Motor and Audi sign formal cooperation agreement to launch new electric models by 2025. Polestar is reported of violating NASDAQ regulations. Xiaomi SU7 smart driving failures lead to car buyback. CATL chairman mobilizes for global expansion, heroes who go overseas. Faraday future revives from delisting threat. BYD launches electric double-decker bus BD11 in the UK with new blade battery. Brazilian market draws Chinese automakers amid rising tariffs. So, buckle up and let's power up for this week. China's electric vehicle industry embraces battery swap technology. In a significant development for the electric vehicle (EV) industry, China FAW Group has joined NIO's battery swap alliance, following in the footsteps of other major automakers like GAC Group, Changan Automobile, Geely Holding, Chery Automobile, JAC Motors, and Lotus Cars. This alliance aims to standardize and expand the battery swap infrastructure, offering an alternative to traditional charging methods. GAC Ion, a subsidiary of GAC Group, has also signed a cooperation framework agreement with CATL for a battery swap project. The collaboration will focus on developing swap-compatible vehicles, producing and circulating battery packs, and managing vehicle and battery data, enhancing the customer experience with a more efficient and convenient energy solution. The strategic cooperation agreement between NIO and GAC is non-exclusive, highlighting the industry's collaborative spirit. GAC has already invested in over 60 battery swap stations, showcasing a commitment to this innovative technology. The Chinese government has expressed its support for battery swap technology through policy incentives, offering tax benefits for the sale of new energy vehicles using the battery swap model. This support is a clear endorsement of the technology's potential to transform the EV charging landscape. Analysts predict that by 2025, China's battery swap industry could reach a market size of 133.4 billion yuan, with the domestic new energy vehicle penetration rate already surpassing 50%. This indicates that the battery swap model is becoming a mainstream option for powering electric vehicles. Turkey engages in advanced talks with BYD and Chery for factory investment. Turkey's Minister of Industry and Technology, Mehmet Fatih Kasir, has announced that the government is in advanced discussions with Chinese automakers BYD and Chery Automobile for potential investments in local factory establishments. Kasir expressed optimism regarding the negotiations, stating that significant progress has been made and there is a strong desire to reach a consensus promptly. In addition to BYD and Chery, Turkey is also exploring investment opportunities with SAIC Motor and Great Wall Motors. The strategic initiative is expected to capitalize on Turkey's advantageous position as a gateway to the European Union market, offering Chinese enterprises superior opportunities for battery investments. The discussions aim to pave the way for smoother market access for Chinese automotive manufacturers into the EU, given Turkey's existing customs union with the bloc. Turkey's domestic automotive market is also notable, with electric vehicles comprising 7.5% of total vehicle sales in 2023. The country's Energy Market Regulatory Authority forecasts an increase of approximately 180,000 electric vehicles by 2025. For BYD, which operates a factory in Hungary, the potential Turkish investment could serve as a hedge against new EU import tariffs on Chinese electric vehicles and avoid additional taxes imposed by Turkey on foreign-made electric cars. The Turkish government's engagement with these negotiations reflects its ongoing efforts to draw foreign investment into its manufacturing sector, particularly the automotive industry. SAIC Motor and Audi sign formal cooperation agreement to launch new electric models by 2025. On May 20th, Audi and SAIC Motor announced the signing of a formal cooperation agreement. The two companies will join forces to develop a new platform specifically for the Chinese market, named the Advanced Digitized Platform. This platform will be the foundation for a new generation of high-end intelligent connected vehicles. The first 3 pure electric models, targeting the B and C segment markets, are planned to be launched, with the inaugural model expected to debut in 2025. This strategic collaboration signifies a significant step forward in the electric vehicle industry, aiming to cater to the evolving demands of Chinese consumers for smart and sustainable mobility solutions. Polestar is reported of violating NASDAQ regulations. NASDAQ has issued a notice to Polestar, stating that due to their failure to timely submit annual reports, the company is required to promptly submit necessary financial reports to the U.S. Securities and Exchange Commission. However, according to Polestar's response, this won't directly affect the listing of the company's securities, which will continue trading on NASDAQ. They're working hard to submit the annual report soon and plan to announce the unaudited financial and operational results for the first quarter of 2024 promptly. Polestar is an electric car brand created by Volvo Car Group and Zhejiang Geely Holding Group. On June 24, 2022, Polestar officially landed on the NASDAQ stock exchange through a corporate merger with the special purpose acquisition company Gores Guggenheim, starting trading with a new stock code PSNY. In February this year, Volvo announced a reduction in its stake in Polestar to 18%, allocating 62.7% of the equity to Geely. Additionally, Polestar announced securing $950 million in external financing, filling the funding gap. Despite setting a global delivery target of 155,000 to 165,000 vehicles for 2025, achieving this goal doesn't seem easy based on current sales figures. However, the company remains confident. Polestar CEO Thomas Ingenlath stated that the Polestar 3 and Polestar 4 luxury SUVs will lay the foundation for strong revenue and profit growth in the second half of the year, supporting the sales target for 2025. Xiaomi SU7 smart driving failures lead to car buyback. A Xiaomi car owner reported that his new Xiaomi SU7 smart driving system failed twice on the highway within a month of purchase. The owner did not receive an official failure report and accepted Xiaomi's car buyback proposal. Xiaomi's customer service acknowledged the smart driving failure as an isolated case and stated that any issues would be addressed. The faulty vehicle has been repurchased by Xiaomi. Industry insiders suggest that the malfunctions may be due to insufficient testing. Despite some owners encountering issues with smart driving features, Xiaomi maintains that the overall failure rate is low. Xiaomi's chairman, Lei Jun, reassured the public that the SU7 model is undergoing extensive testing and emphasized the importance of cautious use of smart driving features. He acknowledged the company's relative newcomer status in the automotive industry but asked for confidence in Xiaomi's capabilities. CATL chairman mobilizes for global expansion, heroes who go overseas. CATL chairman Xing Yuchuan has issued a 2024 mobilization letter, known as the President's Office No. 1 document, encouraging the company to expand overseas. In his letter, Xing highlighted the saturated domestic market and the opportunity for growth in international markets, where CATL's market share rivaled LG's last year. The company's internal slogan, displayed on employees' desktops, reads, "Those who go overseas are the heroes of CATL. Step out and go overseas." CATL's international market share reached 27% in 2023, contributing 33% of its revenue, mainly through exports. CATL has already established or is planning and constructing a total of 8 factories overseas and has reached out to material suppliers to build factories abroad. The company has disclosed plans for 6 overseas factories, including locations in Thuringia, Germany, Hungary, Michigan, USA, in cooperation with Ford, Nevada, USA, in cooperation with Tesla, Indonesia, and Thailand. Additionally, CATL signed a cooperation agreement with the French CMA CGM Group on May 7, focusing on building comprehensive greenhouse gas reduction solutions by leveraging the strengths of both fields. According to the China Automotive Power Battery Industry Innovation Alliance, CATL dominated the domestic power battery market from January to April 2024, with a market share of 47.67%. Faraday Future revives from delisting threat. Faraday Future, FF, once on the brink of delisting due to low stock prices, has seen a remarkable recovery, with shares rebounding above the 1 threshold. The company's stocks surged to $1.65 per share, lifting its market value to $70.41 million after the U.S. proposed increasing tariffs on Chinese electric vehicles, which sent FF's stock on a multi-day rally. This upturn has temporarily alleviated FF's delisting concerns. Xiaomi, FF's founder, has been leveraging this opportunity to underscore FF's role as a bridge between Chinese and American automotive industries, highlighting its unique value. Xia is now concentrating on generating profits to invest in both debt repayment and car manufacturing. Despite past challenges, including a personal bankruptcy reorganization and regulatory fines, Xia remains dedicated to FF's success. Xiaomi shared a video on Weibo, expressing his belief that FF will eventually return to the Chinese market. Despite facing online criticism, he stated that truth will prevail and over time, the facts will become clear. Xia disclosed a personal investment of $700 million in FF, with an additional $3 billion from subsequent funding rounds. He emphasized that FF needs modest funding to maintain operations, suggesting it could manage with a fraction of what competitors spend. He also hinted at a desire to reassess his role within the company, having previously suggested a joint CEO position with current global CEO Matthias. However, FF clarified that Xia's statements were personal and not representative of the company's official stance, and that the board is not considering making him co-CEO. BYD launches electric double-decker bus BD11 in the UK with new Blade battery. BYD has expanded its international reach by unveiling the BD11, an electric double-decker bus featuring the company's new Blade battery technology and dual-gun charging capability, in London, UK. The BYD BD11, set to operate in the second half of this year, can carry up to 90 passengers and is equipped with a 532 kWh battery. The bus is designed with driver and passenger comfort and safety in mind, and can be fitted with advanced safety features such as advanced driver assistance systems. The launch event, held at the London Transport Museum, is historically significant as the museum houses the first double-decker electric bus with a BYD K9e chassis. BYD's electric buses are already a common sight on UK roads, with over 1,800 vehicles in operation, covering more than 127 million kilometers and reducing carbon dioxide emissions by 137 million tons. The BD11 is priced at approximately £400,000 in the UK market, which is roughly equivalent to 3.68 million yuan. BYD's new energy vehicles are now present in 88 countries and regions worldwide, with a presence in over 400 cities. Brazilian market draws Chinese automakers amid rising tariffs. China's automakers, including BYD, Chery, and Great Wall Motors, are pivoting to Latin America as trade tensions in the West escalate. Brazil, in particular, has seen a surge in demand for affordable electric vehicles, EVs, and plug-in hybrids, with Chinese car sales in the first 4 months of the year increasing eightfold from the same period last year. In April, Brazil's total sales of passenger cars and light commercial vehicles reached 208,000 units, a 37% increase from the previous year. Although traditional Western brands like Fiat, Volkswagen, and General Motors still dominate, Chinese manufacturers are making inroads. Notably, BYD, Chery, and Great Wall Motors collectively held a 7% market share in April, a significant jump from the less than 3% share in 2023. The first 4 months saw Chinese automakers selling 48,000 new vehicles in Brazil, a rise closely tied to the market's growing appetite for new energy vehicles. Brazil has been proactive in promoting the EV industry, offering tax exemptions to boost adoption. However, since January, the government has been adjusting policies, ending tax exemptions for some EVs and planning to gradually increase import tariffs by 2026. This policy shift presents both opportunities and challenges for global automakers. In response, many Chinese manufacturers are considering local production in Brazil to avoid rising import taxes. BYD, for instance, announced plans to double its investment in a Brazilian factory to $5.5 billion reais, $1.07 billion, a move that will establish Brazil's first EV plant and signify the expansion of Chinese EV technology on the global stage. The factory is set to be operational by the end of this year, with a projected annual output of 300,000 vehicles. BYD also plans to double its dealerships in Brazil to 200 to meet growing demand. Japanese automakers Toyota and Honda are also investing heavily in Brazil to expand their market share. Toyota plans to invest 11 billion reais to expand its São Paulo factory by 2030 and introduce green fuel vehicles next year. Honda intends to invest 4.2 billion reais, hire 1,700 new workers, and begin production of flexible fuel hybrid SUVs. Yet, the rise of Chinese EV manufacturers, especially BYD, could threaten the market share of these Japanese automakers. Chinese brand entries have led to a significant price reduction for EVs, affecting even traditional fuel car prices. Currently, Chinese brands account for 5.7% of new car sales in Brazil, with BYD and Great Wall Motors performing exceptionally well. About 35% of EVs in Brazil are imported from China. BYD's electric hatchback, the Dolphin, has been warmly received since its launch in Brazil, priced at 149,000 reais, prompting competitors to lower their prices to compete. As Brazil plans to restore import tariffs for hybrids and EVs to 35% by 2026, BYD and Great Wall Motors are localizing production in Brazil to avoid the impact of higher tariffs, a strategic move expected to give them a greater price advantage and market share. The shift of Chinese automakers to Brazil is also facilitated by the strong trade relations between China and Brazil, with China accounting for 30% of Brazil's exports and over 20% of imports. Brazil's government is keen on attracting automotive industry investments to create jobs, with a focus on the EV sector, indicating a long-term growth trend for EVs. Passenger car imports, especially from China, have seen a significant increase. From January to March, import volumes surged by 450% compared to the same period in 2023, with China accounting for about 40% of the total import volume. The increase in car imports is a natural reaction by importers ahead of the tax increase, which started in January 2024 with a 10% import tariff on pure electric vehicles, set to rise to 18% in July and eventually reach 35% by July 2026. The same applies to hybrid vehicles, with import tariffs increasing from 15% this year to 35% by 2026. Marcelo de Godoy, chairman of the Brazilian Association of Vehicle Importers, notes that the demand for EVs in Latin America's largest economy is growing, including for luxury cars. This growth is expected to slow as tariffs increase and the domestic automotive industry develops. That wraps up our episode for this week. Thanks for joining us in today. We hope you're charged up and ready to take on the week with the latest insights from the Chinese EV market. If you enjoyed, don't forget to subscribe, rate, and share with your network. We will put on a link for the full script for this week in the show notes. Connect with us on social media and let us know your thoughts on the topics we covered. See you next week!